Namaste and welcome to the channel of Investment Advisors. Let's deep dive about today's market. In this video, we will break down the latest trends, key movements, and major news shaping global and local markets. As you know, the key event for yesterday was unveiling a sweeping new trade policy that is significantly expected to impact global trade. And we already saw markets all over the world sway to the Trump's tariff tune. Our markets closed mixed. Nifty was down by 82 points, roughly 0.35%. Sensex closed down by 322 points, around 0.42%. Pharma and healthcare sector were positive due to no tariff implications, which closed up by around 2.25%. Export-oriented Asian trading partners see a big blow due to tariffs. China had the steepest levy of 34%. Vietnam had around 46%. India and Japan had 26 and 24% tariffs respectively. This will surely have an impact on the trade deficits of the Asian countries. Because of the tariff announcements, all the markets over the world are in panic sell. US indices are down in the range of 3 to 5%, Europe is down by 2 to 3%, and Asia is down by 0.5 to 3%. Due to uncertainty, oil prices declined by 7%, which remains positive for countries like India as we have highest oil imports. Now let's try and understand what the charts suggest for tomorrow's trade. So as you could see, okay, so as far as the Nifty's chart is concerned, we are still trading in the consolidation zone where the market is markets will have to either move above this level or below this level. So as long as markets trade in this range, we might see just consolidation and no much uh, positivity can be seen until maybe some unexpected positive news or maybe unexpected negative news that comes in. So since all the bad news have already been uh, considered, so we believe that now the markets will start showing that upward rally gradually, and then it might trade for a few days in this range, and then we might see a sudden breakout. So let's try and understand from the perspective of open interest. Today was the weekly expiry for Nifty. So we did not, had much of the movements. So as we had already discussed, based on the open interest data, it was very clear that the markets were expected to move in the range of 200 points, and exactly the same had happened. Nifty, traded in the range of 200 points and ultimately closed at 23,250. So we already see a lot of open interest that has been built for the next weekly expiry, which is on 9th. So this is going to be a short expiry due to market holiday. So we already see a lot of positions that are being built. So it's mixed, I would say. However, there is more weightage for the put writers, as we see huge positions that have been built at each of the lower levels. So we also see a lot of call positions have been built at higher levels, but until any positive news is not expected, we might not see a long range movement for Nifty to trade in. So 24,000 seems to be quite far for a short weekly expiry of only four odd trading sessions. So looking at this, we might have to see how the Indian markets are expected to open tomorrow, simply because all the world markets are down, roughly around 3 to 5%, and US is also, having a big impact in terms of the, trading drawdowns. So we might, see how maybe the world markets open, uh, Asian world markets open, and then accordingly we might also follow the suit. However, we are already disconnected with all the world markets. When we had, been falling, rest other world markets were on a rising trend, and now when all the other world markets are falling, we are, sitting tight in a range bound, trade zone. So as long as we trade in that range, there is nothing much to panic. So the open interest data suggests the same for tomorrow. There is good support at 23,000 levels, and similarly immediate resistance is being seen at 23,500 levels. So once the either of these ranges break, which is to the tune of 500 points, then we might see, new positions that get built, in some range. It majorly it could be, on the higher side itself is what, I am expecting, despite the world markets are trading negatively. So we have to see how Indian markets open. From the perspective of PCR, it seems to be strong at 1.2 for overall, and 1.09 for at the money. So it suggests that, our markets might open flat and then, turn towards positivity. Let's understand from Sensex perspective. So Sensex had also shown positivity, where the markets had actually, opened. From there, we saw a lot of recovery in the markets. However, still, we have not crossed above the significant, two big candles. So as long as, we trade below this, we will have to, trade cautiously, and, limit our position sizing. So once the market closes maybe above this level, 76,700 to 800 levels, then we might see some positivity that can, kick in, and market might, trade in this range which was the previous resistance, and once, it takes out, we might see the higher highs coming in for Sensex 2. So despite, a lot of negativity around the world markets, we have, not fallen, to a great extent. So these were the severe, buying zones, or, attractive candles where we had seen a lot of, buy that had happened from the FIIs at the lower levels. So they are not willing to cut down their positions despite a lot of, negativity and a daily sell-off from the FIIs that we have been seeing. So, from that perspective, charts at least says that, we are not headed on the lower levels. But yeah, we have to, continuously watch and understand how the markets across the world are performing, and is there any further, bad news that can, strike our markets. Moving on to open interest. So, from the open interest perspective, again, we saw huge put additions here as well, huge put additions at each 500 levels. We see a lot of, put additions that, signifies a lot of, strength and support in the market. Similarly, on the higher levels, at around 77,000, 77,200, and then 77,500 levels, and then lastly at 78,000 levels, we see a lot of call writing that has happened. This signifies that, sellers are not willing to, let go of their positions, and will, surely challenge the put writers as they, keep continuing to maybe you know buy at the lower levels. So if you see from the perspective of, 76,500 levels, so we see a lot of, put unwinding that has happened, roughly around, 40% I would say. So this might suggest that, at least in the immediate 1 to 2 trading sessions, markets or maybe Sensex may not be heading towards 76,000 or closing, above 76,500 levels. But yes, gradually there have been, a lot of put additions, that is happening over a period of time. So there is some positivity that is expected to come in. But yes, another a day or 2 days trading session, uh, will give us a clarity as to where the markets is expected to head. So looking at the PCR, overall we are at 1, and at the money it's 0.95, which seems to be, okay. um, Bit of, mild positivity, I could say. Moving on to bank nifty, as I had suggested in my previous video, yesterday's video in fact, that no matter Sensex and Nifty indices seems to be in the negative territory, or at least have not been showing that positivity compared to maybe the bank nifty. So you could evidently see that bank nifty has in fact covered the previous days candle. So this is like, it has fully engulfed the previous 2 days candle. So this shows a lot of positivity in the bank nifty stocks, despite the fact that major private sector, large cap banks did not uh, trade at a higher levels, or there was still not that buying compared to any other public sector banks or the stocks which were part of bank nifty. So there was more strength that was seen in the PSU banks than the major four private banks. Still, despite that, Bank Nifty had taken off the previous highs, and in fact is tad at the level where the um, you know Tuesday's close was there. So if tomorrow Bank Nifty takes out this level, surely there is going to be a resistance at this level. We might touch here and then maybe uh, come downwards roughly around 51,500, and then start moving above, which might lead to moving higher at these levels, where we have another resistance at 53,700 levels, which would be just 0.5% from the 52-week high. So Bank Nifty clearly is in the buying zone, and we have to be keeping a watch on all the banking stocks, because that can give a lot of breakout kind of opportunities to trade, which will signify that uh, with the strength there is no maybe sell off that is expected to come in banking stocks. Now let's understand from open interest perspective. So open interest does not, surely signify either strength or maybe uh, weakness. So as you could see over here, we are in the tight range of 51,000 level to 52,000 levels. So once we take down maybe 52,000 levels decisively, then we might see Bank Nifty trading in the range of 1,500 points from 51,500 levels to 53,000 levels. So this is the biggest hurdle that Bank Nifty is going to face, which is roughly 400 points above the today's closing. So once 52,000 levels is crossed decisively, then we might see a lot of strength in the banking stocks, which might help us move forward towards the 52,500 to 53,000 levels in the April month itself. So at each 500 levels, we see a lot of open interest additions. In fact, at 53,000 level on the put writing, we could see roughly 20% winding of positions. That might signify that uh, call writers are putting a lot of pressure and might not let put writers to maybe step up higher, you know as we move along towards the 52,000 levels. So we have to wait and watch to understand how the positions are expected to be taken in the bank nifty in the coming sessions. So PCR definitely is strong. Overall it is 1.1, and at the money it is 0.96. This again signifies a lot of positivity in the upcoming trading sessions on Bank Nifty too. Lastly, on the FIN Nifty also, closed higher. It did not break down the previous 2 days low, though it opened negatively, but from the bottom we have seen a strong buying that has happened. So we have to decisively close above this level for a strong support, roughly around at 25,000 levels, and from there we will surely see the another 52-week high will be easily taken, as long as fin nifty starts trading in this range. So just waiting for maybe another 100 to 150 or 200 points up, and then we will be back in this zone where fin nifty can consolidate for maybe a week or 2 to 3 trading sessions, and then from there we can see the 52-week high can be touched. So there is no negativity in financial services stocks again, but yeah, given how the world markets are shaping up, we might have some impact even that would be seen in our markets, and gradually we can stabilize for the next higher moves. From the open interest perspective, we still do not see a lot of put writing that is happening at the higher levels. Rather, at each higher level we see a good call writing additions that has been done at 25,000 levels, and then subsequently at 25,500 levels, which in the uh, 1 month time zone, not sure if we will be able to reach or close decisively above 25,500 levels. But there emerges a strong additions at each support zones, that is at 24,500, 24,000 700, and then 24,800, and at 25,000 level too. So as long as some additions continue happening at the higher levels, we might see that fin nifty can gradually head towards the higher highs and making or closing above the 52-week high. So from the PCR standpoint, it seems to be quite weak, both overall as well as at the money is still okay, mild bearish in fact I would say. So fin nifty compared to maybe bank nifty does not show that strength and lot of positivity, at least in today's trade and from the open interest perspective too. So let's track how the charts is expected to move hereafter on fin nifty. Lastly, from the perspective of FII and DII data. So FII have been short in index futures to the tune of 73,190 contracts. On stock futures, they are quite bullish at 16.11 lakh. On the call options, they are long, 2.27 lakh contracts, and on put options, they are again long at 2.41 lakh contracts. So net, we do not see a lot of, positivity here. So FIIs overall are, expecting the markets to trade either in range bound or maybe open lowers or trade lower. Let's talk from the perspective of proprietary traders. So they are short on index futures, and they are mildly long on stock futures to the tune of 3.97 lakhs. On call options they are again short, and on put options again they are short. So exactly opposite, FIIs as well as proprietary traders are taking the positions. So proprietary traders in fact are long by 13,060 contracts, so which is not decisive in nature. But yeah, as we keep discussing, as long as either of these two participants do not trade hand in hand, then we might see some reversal that is expected to happen either side, be it on upper levels or the lower levels on the Indian markets. So we have to be cautious whenever we see such kind of positions being taken. So talking from the perspective of retailers or client data, they are long on index futures, mildly long. They are heavily bullish on stock futures, and on call options they are heavily short, and on put options they are again heavily short. So this means that uh, uh, client or retailers are expecting the markets to open range bound or maybe trade positively, seem like the proprietary traders. So FIIs are short, and DIIs or maybe client retailers and proprietary traders are long. So let's see how the market is expected to open tomorrow, and how the trend is expected to catch up based on these open interest positions. Lastly, on the domestic institutions investment in the cash market, so they have just been positive, or are holding or bought 221 crores in the cash market. However, FIIs have sold to the tune of 2,806 crore. Now, as long as FIIs remain bearish, and continue to take um, sell positions or sell off their positions from the cash market, till then we might not see a big candle on the positive side. So we definitely need participation, long participation in fact from the FIIs to take our markets on a positive trajectory. Okay. Yeah, so till then, thank you for watching our channel, and be in touch. Do not forget to like, share, and subscribe for our daily market insights.